Hey everybody, President Brent here with our Trader User Group, a weekly roundup for the trading week ending December 4th, 2015. Really interesting week, everybody. Um, I've got a weekly chart here of the S&P 500 futures, the E-minis, and I'm kind of stretching it out a little bit just to show you the uh, um, the bar here. This is a weekly bar, and you could see right there, that's where we were. We actually closed about a point lower than where we opened. We opened the week around 2089.50, and we closed the week at 2088.50. So almost 1 point. You can see right here the width of this bar. It was very wide, and we opened right here and we closed right here. And for the past, you know, 3 weeks we haven't really gone very far as where the markets have opened. Now, yes, we've definitely come down, but then during the week and towards the end of the week, we've moved back up. But at the same time, we haven't been able to clear this 2110 area here, which is a key pivot point from just a few weeks ago. So we've got to be very careful with this market, everybody, because and although we are in that seasonal period where the markets just want to go higher as we go through the end of the year, and I suspect that may happen, but we got to be very careful as we go into January, February timeframe. That's the way the charts seem to be indicating themselves right now. If you look at this, you could see that bar. It just shows a lot of indecision in the market. If I take it down to a daily chart, you can see here that range that we've been in going back, and we've had a little bit of a brief dip. But at the same time, as I told our members, um, we've got this point right here. We didn't quite hit it right here, but we're setting up for that um, bearish divergence type of move. Right now, we do have a pretty good strong uptrend here, and a near term on a daily basis, this pattern right here, which is a ascending triangle, right? Not a descending, but an ascending, because the lower trend line is moving up and the upper component of the triangle is flat. The traditional break in this kind of pattern is right up in this area right there. That's the traditional break. And then the distance of the move typically is measured by the mouth of the triangle itself. So that would suggest around 100 points, give or take a little 10 or 15 points. That would suggest about 100 points should we break here. And that would put us right up around 2200 going into January, February timeframe, and then a big pullback. Now, I don't know if we're going to make that. I do not know if this pattern is going to resolve itself to the upside. Traditionally the pattern resolves itself to the upside and we move higher. Keep in mind, next week is triple option witching. We've got, or quadruple, depending on how you want to call it, but we got quarterlies expiring, monthlies expiring, weeklies expiring, futures expiring, and the markets tend to move higher, grind higher on a triple witching week, option expiration week. And because it happens to be the fourth quarter in December, it's even more so a break to the upside. So for me, I see this right here is a pretty interesting area that we want to watch for. Should we break it, then I believe as we go into the end of the year, we could challenge our 2134 area, which is the upside of the E-minis. That's where I would see. But we also have this bearish divergence here. And it's going to limit any I think any kind of move to the upside is going to be putting a lot of downward pressure uh, on the markets here like that. That downward pressure is going to really be tough to break. If we do break it, you're going to see a fast run up because there are a lot of stops sitting up in this area right here. But it could run quick, which would give us the fulfillment of that pattern that I just showed you. But right now, the way I'm looking at the markets, I see that we can grind higher through the end of the year, possibly even take out the 2134. Volatility could come in a little bit, and then sometime in January, February, we could repeat what we did last year at the beginning of 2015, where we have a little bit of a pullback before we catch wind again into the springtime. So that's how this thing is starting to shape up. You can see these fibs here. If I take us out to the monthly chart to get a much wider view, this is why I'm a little bit nervous about this market right here. You can see on this monthly view, I've got the Fibonacci's that I've drawn were the pivot low here back in March, early March of 2009, and then of course the pivot high here at 2134. You can see that this down move, and now we've come right back very quickly. If this fails here, we're and again, each bar is 1 month, so the failure may not be till February or even March of next year, or April or May, or in the summer of next year, because it's a monthly chart. But I do believe we're going to get a failure, and then the markets are going to come down and probably test somewhere in this area here around 1800, 1789. Take out the October 2014 lows, take out these August lows that we made just recently, and we're going to get that move, but not before I think we suck more people in and clear this 2134 all-time high on the E-minis. So that's kind of how I'm seeing this market shaping up. I do see that as a pretty good support area. But if the markets get very ugly, we're going to come down to this area right here, 1575. We'll be in a recession. Remember, some analysts say that we're going to have a recession. The U.S. is going to have a recession in 2016. There's some that are saying, and factually they are correct, the manufacturing sector in the United States is already in a recession. The definition of a recession is 2 quarters in a row of sub-zero growth. Our manufacturing sector is that way. Just this past this past week, towards the end of the week, we got an ISM number that was below 50. That shows contraction. Globally, we're seeing the same thing over in Europe. We're seeing the same thing in China, South Korea, big export companies, Japan. And should that be enough to pull the U.S. down, then in the spring, summer of next year, it could get pretty ugly. But anyway, we're going to take it 1 bar at a time. But this is where, just kind of looking at where the charts seem to be suggesting right now, what is the risk out there? And of course, if we come down to this 38% fib level, you know, if I were to extend it right over to the right, it would essentially be the highs that we made before we dipped in 2007 all the way down to 2009 in this big move down like that, right, before we shifted and started moving back up like that. So that is where I'm looking at these charts right now, and I wanted to point that out. So near term, I don't see a big drop like that. Near term, I don't see it. I don't see a wide drop here. So let me just shift a couple of things on my screen, so it's gonna change different colors and come back up here like that. So that's kind of where we're sitting right now here. So this is the market that I see. This is how I see it playing itself out. Okay, so now if we come in and let's go back to a daily chart. And I'm going to put my drawings back on the screen. You can see right here, and I've got a lot of markings on the chart. Every line, every color means something to me. To you, it probably doesn't. But one color I do wanted to show you, or a couple, that you need to pay attention to going into the end of the year. This 2055 number is the opening price of the S&P 500 E-mini futures at the beginning of the year. You can see we're up in this area here. So we're fairly close. We kind of crossed this line many times this year. You can see the red line, which is the 50 EMA, and the yellow line, which is the 200 EMA. We crossed back here about the middle of November, and we've been moving this up. So we've got a lot of support down in this area right here, which would be right around starting at the 2050 area, 2051 area, down to a really key support level at 2032, which is kind of right in here, which is near right in that line right there. So up above this area here, we got a lot of support. I don't believe we're going to break that before the end of the year. I think the probability of the move, at least near term, is up to this zone up in here. But then, like I said, as we go into January, February, I think it all shifts. And then we're susceptible to a bigger move to the downside. If we come in and we take a look at the strongest chart, which is the NASDAQ 100, you can see right here, we actually made a new high in the NASDAQ 100 back over here on the 2nd of December. So we actually came up here at 47.39.50. So that's a new high for 2015. So we're busting out new highs right now. Again, though, it's the same pattern that we've got in the other. We've got a high and then another high, but we're getting this big bearish divergence setup here, which does suggest that the price is getting harder and harder to hold up here. The other thing we got is a dichotomy between NASDAQ and the Russell. The Russell is really underperforming. It's the worst index underperforming in the U.S. markets. You can see the 50 EMA, the 200 EMA, they've got a nice separation between the two. We had that cross right back over here in early October. It took till middle of November to get that same cross to the upside in the E-minis. But you can see we're challenging the highs here, and we're well off the opening price of 2015 for the year here. So that's kind of where the NASDAQ is sitting. It is the strongest. And now I'm going to show you the weakest. The weakest chart is the Russell. And if we look at the Russell, you're going to see here, we're nowhere near the opening price of the Russell. The Russell is still in the red for the year. Keep in mind the Russell is small cap stocks. We need small cap to participate to really go much higher. That's the opening price of the Russell futures for the year, 1203.9. This is where we're sitting right now. The 50 EMA is still below the 200 EMA. And we've had a number of touches right here, and we just can't seem to get up above it. Folks, if we can't get up here as we start to go in towards the end of the year, that's not going to be good news for the rest of the markets. It's going to create a further dichotomy between the NASDAQ and the Russell, and sometimes these markets outperform the other at various times during the year, and then they start to snap back, but they're all correlated. And you cannot have one getting too far ahead of the other. Right now, as you can see, the Russell is very far ahead of, the NASDAQ is very far ahead of the Russell. The Russell is down in this area right here. Here's the opening price for the year, and here's the high for the Russell for the year. Remember, NASDAQ was already up in this area. So you've got a wide difference in performance of small cap and then the NASDAQ 100. That's going to right itself. Markets will eventually correlate back, which would mean if you're a pairs trader, you would probably short NASDAQ, right? And then you would probably go long the Russell futures. That would be one way to make the play. There are a number of other ways to make a pair trade here, but that's just one thought for you guys. That is assuming the rut doesn't go down and drag everybody else down with it. But even if they do, this delta between the two is probably going to narrow, or this gap between the two is probably going to narrow over the next 90 days. I see that happening as a pretty interesting trade. There are a lot of other things going on right now in the markets, from the energy market, from the volatility side of things, from gold, silver, currencies. We've had a lot of great trades in currencies. Bond market, we got some great things going on there too. We've got this holiday offer that I highly encourage you to come up and take advantage of, and come on in and join us. 2016 is going to be another fun year for us. So if you haven't done so already, highly recommend you come on in and take me up on my holiday offer here, because come January is going to be pulled. So have a really great weekend, everybody. For our members, I will see you tonight in our weekly market watch. Have a good one, everybody. Bye now.